part of the goal here is to give you a snapshot of what's going on to help you create the deal you want for 17. Also, the second thing to remember is getting clear in your goals will be really critical in 2017. If your goal is to basically just have a property and not care about cash flow or cap rate or rate of return, you can certainly do that. If your goal is different though, and you're looking at cash flow as a number one goal, then looking at the secondary markets and emerging markets that are in different cycles may be a viable option for you. To give you an idea, when you look at Salem, I think has turned into Portland South, if you will. People are commuting. My wife has 2 people that commute from Salem. One of them rides a bus every day and puts an audiobook in and commutes from Salem. You're looking at the transactions occurring. A bunch more transactions, pretty much double since 2012 and 13. So people are going into Salem as a viable market. I think we're 35 minutes from where we sit right now to Kaiser. Some clients own in Kaiser, so closer to that property than it is in Hillsborough sometimes, depending on traffic. So it's not necessarily that far away. So transactions are occurring in Salem. Price per unit jumped up last year. This is hard to read, but this is $73,000 a door, whereas just 4 short years ago, the average was $35,000 a door. So value has really spiked up in Salem, but when you compare that with Portland, that's still half the cost per unit. Average price per square foot, that's gone up in Salem at $82. What were we in Portland? Does anybody remember what that was? 130, 133? Yeah, so still, 60% of that cost, 70%? And then you look at the median cap rate hovering right around 6.5, 6.36 in 2016. So if you're looking to go to a Salem market, there could be some opportunities there if cash flow is one of your goals. The other emerging market that we're seeing is actually in the Phoenix market. My business partner, Joe Chaplick, is in Phoenix. I think 4 or 5 clients sold in Portland and bought in Phoenix. One went from, essentially one's going right now 10 units to 100 units, and another couple scenarios where 50 units went into 200 units because the Phoenix market got hit so hard with the recession. And now they're coming back, but they were starting at $20,000, $25,000 a door. And now you can find a really good deal at 40, 50, 60 grand a door. The key is anytime you go to a different market, the question is how are you going to run it? And if you're under 50 units, it's really tough to have good management, as you guys know, without putting eyeballs on it. It's a really tough spot to be in. But if you can get in now 50, 60, 100 plus units, you can find really good management and go visit once or twice a year and feel comfortable. So that's a market that's really strong, and if you guys have any questions on that, let me know. But if you're looking for really strong cash flow, Portland might be a tough market in 17 to buy. And if I can ever help in any way, just bounce some ideas or any questions, let me know. And great to see all of you, and let me know how I can help.